You've seen the ads. Settle your IRS debt for pennies on the dollar. Late night TV, radio, billboards on the highway. Here's what they don't tell you. The IRS rejects more than half of these applications. Half. If you apply the wrong way or you hire the wrong company, you don't just waste your money, you waste months of time while interest and penalties keep accruing and piling up. And you end up right back where you started off, except worse. I'm James Duff, licensed CPA, and in this video, I'm going to show you exactly how an offer in compromise actually works, why so many people get rejected, and how to know if you genuinely qualify before you spend $1 pursuing one. Welcome back to Tax Problem Central. I've been a CPA for 15 years, and I've filed offer and compromises for clients who legitimately could not pay their full IRS debt. Some of them settled for a fraction of what they owed. But I've also had people come to me after paying thousands of dollars to a tax relief company that promised them an OIC, and they got rejected because nobody told them the truth about how this program actually works. Well, that ends today. If you're new here, subscribe, because every week I break down what the IRS doesn't want you to figure out on your own. An offer in compromise, OIC for short, is a legitimate IRS program that allows certain taxpayers to settle their tax debt for less than the full amount owed. It is real, it does happen, and I've seen it work. But here's the part the commercials skip. The IRS does not approve an OIC because you asked nicely or because you can't afford to pay. The IRS approves an OIC based on very specific financial formulas. According to IRS data, roughly 60% of offer in compromise applications get rejected. Here's what happens again and again. Reason number one, they don't actually qualify based on the formula. The IRS calculates what's called your reasonable collection potential. Basically, what they believe they could collect from you through your assets and future income, even if it takes years. If your RCP is higher than what you're offering, you get rejected. No exceptions, no negotiations, on the point. Reason number two, they filed with incomplete or inaccurate financial documentation. The IRS requires extremely detailed financial disclosure. Income, expenses, assets, equity in your home, retirement accounts, vehicles. Miss something or misrepresent something and your offer gets denied or delayed for months. Reason number three, they're not in compliance. If you have unfiled tax returns or if you're not current on your estimated payments for the year, the IRS won't even consider your offer. They'll send it right back. Reason number four, they worked with a company that filed it wrong or never filed it at all. This is the one that makes me most upset. There are companies that take a large upfront fee, promise a settlement, and either file an offer in compromise that has zero chance of acceptance, or in some documented cases, never file anything at all. Let me pull back the curtain on the formula, because once you understand it, you'll know in about 5 minutes whether you have a realistic chance. The IRS looks at two main things. First being your assets. Your home equity, your vehicles, bank accounts, retirement accounts, what could be liquidated. And secondly, your future income. Your monthly disposable income multiplied by either 12 months or 24 months, depending on the payment option you choose. Add those together, and that's roughly your reasonable collection potential. The minimum the IRS will generally accept. If you own a home with significant equity, or if you have a high steady income, your RCP may be close to or higher than what you owe. In that case, an OIC isn't realistic. You're a better candidate for an installment agreement instead. But if you have limited assets, inconsistent or low income, and genuine financial hardship, that's where the OIC becomes a very real possibility. Okay, so who actually qualifies? Here is a more honest checklist than you would see in an ad. You may be a strong candidate if your monthly expenses, allowed by IRS standards, consume most or all of your income. You have little to no equity in real estate or other major assets. Your income has dropped off significantly and may not recover soon. you have a documented hardship, a job loss, medical issues, disability. You're probably not a strong candidate if you own significant equity in your home, you have a stable, strong income relative to your debt, or if you have unfiled tax returns, or you're not current on this year's estimated payments. This isn't meant to discourage you. It's meant to save you the time and money so you pursue the resolution that's actually right for your situation. Here's what I recommend before you spend $1 on an offer in compromise. Step 1. Get a real financial analysis done. Your actual reasonable collection potential calculated honestly before you file anything. Step 2, make sure you're in full compliance. All returns filed, current estimated payments made. The IRS won't even look at your case otherwise. Step 3, if you don't qualify for an OIC, don't panic. You'll likely qualify for something else. An installment agreement, currently not collectible status, penalty abatement, who knows? Step 4, work with a licensed CPA or an enrolled agent, not a call center. These are the professionals legally authorized to represent you before the IRS. And they can tell you honestly before you spend the money what an OIC is going to do for you. An offer in compromise can be life-changing if you genuinely qualify, but it's not a guarantee and it's not for everyone. And the ads that make it sound easy are not telling the full story. If you have an IRS debt and you want an honest answer about whether you qualify, call my office at 203-589-4077. You'll deal directly with a CPA or an EA, not a call center, not an intake agent. I'll tell you the truth about your situation before you spend $1. You can also visit dufftaxresolution.com or email inquiry@dufftaxresolution.com. If this video helped you, subscribe and share it with someone who's seen those late night commercials and wondered if it's actually real. Drop your question in comments. I read every one. Next, I'm going to break down the currently not collectible status. Because if you don't qualify for an OIC, this might be exactly what you need. I'll see you there.